All right, so I thought that today I would only be doing one Palantir video, but here I am. I'm going to do another one. The 10Q just got released about an hour ago, 30 minutes ago, and I ran through it already. I did make a longer video, but I realized, it's not going to interest people because the material's super dry. So what I'm going to do is I'm going to run through the numbers quickly, show you where I think there's some areas to improve, and pretty much call it a day. So I think, and this is my personal challenge, I think I could do this. I think I can do this in 10 minutes, okay? All right, don't, I'm not gonna bet on it, but I think I can do it. So let's go. All right, so we're gonna switch it up. This is a 10Q as of June 30th, 2022. Now we're going straight to the balance sheet. Balance sheet is, we're comparing June 30th, 2022 with December 31st, 2021. Now, overall, there's not much to say here, okay? The accounts receivable has went up a little bit, about $75 million. That means that when it's collected, cash flow from ops is gonna go up. Cash flow from here doesn't change much, 2.3, 2.4-ish if you round up. So that's fine. In terms of liabilities, not a lot changed, 665 versus 660, so not a lot of substance there. Nothing's really going on. Total shares outstanding. Did they give that detail here? They do later on, so whatever, I'll get into that later. In terms of revenues, we can see here that the margins have been improving, 551 related to 716 as of June 30th, 2021. And here you see 723 to 919. So that's about 77% gross margin versus 79% gross margin. So it's a 2% improvement. But I really feel like they need to improve this, find ways to improve the margins and cut down on costs. Because here, the loss from operations, it's largely just due to expenses. And SBC has improved. Like SBC went down big time year over year. It's buried in these costs, and you can see last year it was minus 260, but now it's at minus 81, and that's largely due to reductions of SBC. There's also in this 81 an increase of hiring, right? They hired more talent, they have more salespeople in Europe and in the US, so this has a pressure on margins. But at the same time, I feel like they need to do better cost controlling, because I'm under the impression that they do not manage their costs, especially when it comes to salaries, because they have all kinds of SBC they don't care about. And, I don't feel like there's that behavior or that controlling attitude at Palantir to control the expenses. Like, they do things without even considering expenses because they're always blowing money, and it's not really clear on what, like sales and marketing, R&D, G&A. Like, I don't understand what's in these details. I wish we had more color to know what's the biggest expenses in here. But right now, I would have to assume it's talent because they're a software company, a services company. So it would have to be the talent cost that is the most in here. But the big thing that stuck out to me, which really upsets me, is the losses on SPACs. You see last period, they had almost virtually zero losses in other income and expense, but now they have 196 million. And this is largely the realized and unrealized losses on SPACs, and also realized and unrealized losses or gains on FX. So this is a huge turnoff. I hate the fact that the company just invested in SPACs. Some people say, yes, they invested 50 mil, but in return, they got a revenue agreement for 50 mil or more. And I do agree with that. But if these SPACs don't survive the next 1-2 years, then Palantir is going to have to take a full loss on these investments because they're never going to see that money back. So that's what's key. If those companies can survive for the next few years and they can continue to honor their service agreements with Palantir, then Palantir walks away a winner because they recovered the dollars through their revenue contracts, and they're still holding on to shares of the company. Even though the shares are deep in losses, they still have ownership of that company. So it's to be seen how that's all going to play out. In terms of share issuance and stock issuance, you can see here from March 31st, 2022, they were at 245 and they finished at 262. So not a lot of shares were issued actually in the last 3 months, which is nice to see. Now cash flow from ops, you see here starting point 280 million net loss. Here's the big number. SBC 295, so stock-based compensation, that 295 is scattered between a lot of the lines. It went down in an important way. Last year it was 426, so it went down 426, and here it's 295, so it has decreased. But the fact that it has decreased, you see here it was 426, there's a decrease of like 120, so you would assume loss from operations to improve by 120, like instead of being 262, would be 262 minus 120. It should have been like 140 losses, but instead of being 140 losses, it's much higher because we have the goddamn SPACs. So there's that. Now if we go through here, we see unrealized and realized losses from marketable securities, 201. So they have 201 in terms of losses. So that's what's buried in here, the 201. You see here they said they lost wait, you see here they said they lost to 195. In that 195 of losses expense, you see here expense 195, they have 201 for the cash flow statement that's related to realized and unrealized gains on marketable securities. So the rest is just FX, and it's a shame. It's a shame to see that. It hurts, but those are the macro conditions today, and a lot of speculative investments have been hammered down. So overall, cash flow from ops is 97 or 99, 98. Then they sold and invested in some shares, so they had some finance activities. So 91 comes in to offset the 98. So they're up like 7. But then they also got cash injections from people who exercise stock options. So in total, they got 48 million increase overall. So that's the increase we see in cash. Now going through here, we don't see anything really important. It's the same standard notes, nothing unusual, nothing that's being changed. A lot of influencers, I like to say, are full of shit because they are. They don't know anything, and you know who you are. A lot of them don't look at the financials. They don't look at the actual 10Qs, and they just look at like shareholder presentations. Like I saw on the Discord community today, in the Palantir Discord community, that Palantir is trying to mislead people by talking about trailing 12 months. But the truth is, they've always had trailing 12 months in their marketing materials. This is the first time that they've touched it on revenues for US based business, because they want to bring the investors' attention to the point that this is the first time in the last 12 months they crossed 1 billion in the US alone. And that's a big accomplishment for a company that has never done that before. So that's why they stressed this point. But then after that, when they talk about revenue growths, they do snapshots of the quarter. When they talk about customer growths, they always did trailing 12, trailing 12, trailing 12. So I don't know why people are saying that they're misleading or something, because if you go to this is Q1, if you go to their Q1, you can see that they always discussed trailing 12 for customers, trailing 12 average revenue, trailing 12 commercial customer count. Like it's nothing new. It's not an effort to mislead. And I find that troubling when people say stuff like that, because it's either that they're resistant to change, they're resistant to improved reporting to help people understand, or they're just trying to create fear, and that's what I find is a bit of a concern. Here they say trailing 12-month revenue per customer. What did they? U.S. government cohort. I really like the slide, but they don't show it anymore. But like over here, you see here commercial business. Here the people are right. They just gave a year-end snapshot of how many customers they have, or maybe it was trailing 12 months and they just didn't tell you. But even here for US commercial customer count, it's a snapshot. But then in Q1, they started to give trailing 12 months because I think they decided it was more pertinent. That's the whole purpose of financial reporting, right? It's to give more pertinent information, and materials like this, marketing materials, those are at the discretion of the company, so they can do whatever they want. But the 10Q, that's standardized stuff. So here it's standardized stuff that you're seeing, and this is where most of the details are. And this is where you need to be focused on. You can try to lament on how the marketing materials are changing or evolving and they're not the same like they used to be, but that's marketing materials. They're meant to change, they're meant to improve, they're meant to convey more data to people. I wouldn't say it's necessarily hiding stuff. Okay, so 10 minutes has passed. I'm gonna have to wrap this up in 5. So now we go through the details here. One of the things I liked is that no customer represents more than 10% of total revenues. That's always good to know for Palantir. Go through the notes, nothing crazy here, nothing crazy there. Purchase commitments and investment commitments. Okay, so this is good. I need to look into this one. So they talk about something interesting here. Where is it? I think I skipped over it on the investment agreement section. Oh, right here, investments. So here they say total value of commercial contracts related to the investments that they've made is 755 million as of June 30th, 2022. And then they say for the 6 months ended, they only had 71 million. So out of this 6 months ended $900 million revenue they pulled in, 70 was related to the commercial agreements for the investments that they've made. So not too crazy. It's not crazy. Now, warranties, yeah, that's fine. Shareholders equity, no major change here. Now, where is the fun stuff? They talk about SBC. You see here, SBC was 426 last year. 426, it's buried in these different lines, and now it's 295. If SBC goes away, the company will be profitable, but obviously it's not going away. But if SBC, you see here the 295, if it's gone like completely, then 100% they would be profitable. You know, you see here the net loss of 280, at 295. And anyways, the band-aid had to get pulled on the SPACs. The SPACs are down, fine. So it's now minus 195. It won't show up again. You get it? So next year, if the SPACs contain the same value, you're not going to see another 195 showing up again, or another 201 showing up again for the decrease in SPACs. So if we get those SPACs out of the way, then you're really working with is the loss here, the loss from operations. And the fact that they have 290 in SBC and you have 80 in losses, like they just have to trim the SBC a little bit here and there, and they would be profitable, like gap profitable. So there is a pathway there. It's just you have to be aggressive with it and get there. I'm not sure if they will though, because talent is hard to come by. Now, segment and geographic information. This is some important stuff. As you can see, commercial is starting to get more and more important. It went from 276 out of 716 to 414 out of 919. So that is an important trend line. It's showing that commercial is starting to become more important. So 414, yeah, I did the calc here, 45%, whereas before it was 38%. So commercial is growing by 7% year over year in terms of total revenues, which is a positive sign. It's a trend in the right direction. In terms of losses, in terms of contribution, sorry, you see here it's the same story, 221 over 514 or 515, whatever, 42% or 43%, whereas last year it was 423, 34%. So commercial starting to have more weight, starting to carry more weight, having a bigger impact on contribution, and it's nice to see that. And that's probably because a lot of commercial customers have similar needs, whereas governments often require customization with their needs. So customers probably have, you know, it's probably a quick win whenever Palantir acquires new customers. It's the same solutions that they probably all need. In terms of revenues, in terms of geographic data, US has grown from 56 to 61, which is good, and the UK has grown slightly, 10 to 11. So that's interesting. And that's pretty much it. So we're done for the 10Q. I don't see any major red flags here. I don't, not in this. Now, the major red flags, as I mentioned before in my last video, is the fact that the company is forecasting lower growth. They're saying revenue should come in at 23% instead of a full 30. But the caveat is that if the US government issues awards to Palantir, then it's gonna be good. It's gonna be a game changer. So that's all I have to say. 10Q, real quick wrap up. No major red flags. The only thing that pissed me off in it was seeing the SPAC losses of 201 million. It was disgusting to see. The SBC is at 295, but it's been trimmed big time from prior year, almost 120 million. So that's very good, but that's also because the value of the shares are going down. So the value of the SBC is going down. The value of the SBC expense that has to be booked is going down. But it is a interesting time for Palantir. Their cash flow is still the same. They have 2.4 billion and they have up to, or close to $1 billion in credits that they can access. So it is something to see and wonder what they're going to do. What is their next steps? And I'm excited. I'm still hanging in for the ride. I'm selling my covered calls aggressively. It does suck though to sell covered calls on Palantir, because sometimes it's like you think you're going to hit it. You're thinking you're going to be okay. And then the stock rips. And then if you roll, then the stock dips. Then you kind of like played yourself. So I always hesitate with that, and I gotta like get with the program and just say, okay, if I sold the covered call at 1050, just gotta let it ride. Whatever, if it goes up, it goes up. You know, I shouldn't think, oh my god, maybe it'll go to 12, so let me roll and sell 1150 and try to get a little bit more type of bullshit. Like, screw it. As you can tell, the stock is so volatile. Today it was down 13%, so that's how it is. So I have nothing more to add. Thank you for listening. If you like what you hear, then obviously hit the subscribe button. If you have any questions, leave the comments. I will check it out and get back to you sooner or later. So see you on the next video. Peace.